as long as we do not have an interruption of the higher highs and higher lows in the US, we still have to stick with the uptrend.
Good morning, Bruno, and welcome back to our Geneva studios. So we're looking at yesterday, there was an important decline in the US market. How do you assess that?
Good morning, Celeste. Yes, looking at the S&P 500, what we noticed immediately with these big down days is that about more than 1%. It's a new higher volatility than it used to be in the past 5 weeks. And the volatility is rising a little bit. But however, from a technical viewpoint, you see the top was at 2400 beginning of March, and then it moved down to 2350, moved back up 2390. It fails to make a new high, and then this could come as the second part of the correction, and probably it could end somewhere around 2330.
And so looking at the longer term, is this the start of a major correction?
Well, look at this weekly chart for now 18 months. So what we've got is of course the rising trend line has been broken around 2380, and it's still though above this consolidation before around 2250. And here there are a few gaps which are still intact, so that means basically this is only a correction, even though the momentum has come down, and it can go sideways for a few periods.
And so what has caused this correction so far?
Well, when we look in the internal of the US market, for example, when we compare discretionary XLY divided by the staples, so basically the cyclical versus the defensive, what we notice is already since January clearly a kind of a sideways range of this ratio, moving a little bit lower. That means defensive are outperforming cyclicals, and that's what come to the forefront right now. For example, if we look at discretionary, here we see two things. First of all, there was a rising trend of this sector in the last few weeks. However, it's breaking its support, and it also broke down the trend support here. So here the move is relatively important from the top of the Bollinger Bands in red to the bottom one, and the momentum is coming down. However, if you look at staples, which is the lower part of our ratio, we see the relative strength is rising very strongly. That means it's outperforming the S&P 500. And here we almost see nothing in yesterday's move. So it is just a sideways consolidation. So here we see that it is probably an internal rotation.
And so does this mean that the cyclicals will correct?
So that means that other sectors together with cyclicals are probably correcting, and one of the leaders have been, for example, technology. So technology has been rising with a relative strength up. Okay, so that was really taking the whole market up. Here now we have a one daily big reversal day. That means it's just go down, break a trend support, but it's still above its previous zone of support and consolidation. So momentum is coming down, so it suggests a bit more sideways, probably down to the 38% retracement of this whole move from February to mid of March, but then probably again more sideways than just a big correction down.
And so what else has corrected yesterday?
Well, you see while the price was of the S&P was moving down, from the Fed move last week, from the interest rates on the long end went from 260 to 240, which is a kind of an important levels. Why these levels? These 240 levels, we have to remember, has been a kind of a support in the past, in 2015 and 16. So now that we have made an acceleration up from the bottom of the range to the top of the range, this lowering rates is probably just a pullback.
And so the interest rates were declining. Is this good for the markets?
Well, in theory, yes, but in our particular case, it is not. And we see that clearly on the financial sectors. We see that the move down yesterday was also accompanied by a move down of the financial sector. Therefore, what we need to notice is that we have moved quite a lot always almost to the former resistance line here, around 23. So it could very well go sideways and rebound here. So probably most of the move has been anticipated in the interest rates.
And so all this movement on the US market, has that affected the Japan market?
Well, this is a good question. Look at the relative strength in dotted line of the Nikkei versus the S&P 500, and you see it was coming down, and recently it has been moving up, and not very strongly, but it's moving up. We noticed that this Nikkei is already in a trending range for a little while, and probably it has been more influenced by the fact that recently the yen in orange has been moving up, so it's hurting a little bit the export. So here, price this morning are not at that level, but already where the arrows is pointing down, already close to the cloud at 19,000, and therefore it is a level which can be considered an area of support. So its influence, yesterday's price action in the US is influencing also the Nikkei, but in a lesser manner.
And is this also the case for Europe?
Well, exactly. It is strangely exactly the same case for Europe. It's relatively rare to see when US is correcting that relative strength is moving up. Usually, Europe is correcting more than the US. So that really reinforces the fact that probably it's more an internal affair in the US than a global affair. So we see here just a small correction, not nothing, but it's still within the uptrend.
And so are you saying that emerging markets are not affected by this correction?
Well, they mostly not. Let's say, look at the China ETF. China ETF has just been making yesterday in the morning a higher high, so it's in full uptrend. And the correction now is not really reversing this whole progression of higher highs and higher lows. But the relative strength here is clearly moving up. So we need to select among the different emerging markets. China is doing well. India here is in the same situation with a relative strength versus the S&P moving up. So both are leaders. However, Brazil is a little bit more weaker with a relative strength being about flat to slightly down. So the impact will be stronger on Brazil. All in all, we can see that globally it's not affecting too much all the market outside of the US, or it might be a relatively internal affair for the US. And as long as we do not have an interruption of the higher highs and higher lows in the US, we still have to stick with the uptrend.
Well, Bruno, as always, thank you so much for coming into our studios and giving us a bit of a breakdown of the markets.
You're welcome.
That's all from myself and Bruno Estier today. But if you like this video, there are plenty more on our website, dukascopy.tv.